Hello and welcome to another episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Woo. Links available in the description below. Don, it still sounds weird and feels weird to say Woo, and then it's like a serious centralized trading exchange. On the other hand, it's called Woo. Do you know what I mean? I think it just takes the wind out of the seriousness sales in the first 10 seconds of the show. Don't know how to feel about that. It's like brought to you by Woo. It's like, okay, especially maybe with the British accent, it's even worse. I don't know, man.
No, it's good to set expectations low.
That's true. If it's anything to say for the rest of the show, for sure. I think the way you pronounce it is even harsher. You're like woo, you know. It's like trying to scare your infant daughter. In any case, they give us money somehow. So, despite all this, we talked about them last week with the transition in terms of diversifying the liquidity. Sounds like a nerdy, dumb thing to say, but honestly, if you haven't tried the exchange, it is materially different from when we first signed on, and that's a good thing. So if you want to check them out, do. You can support the show. If not, hopefully watch the show anyway. Don, it also looks like BTC might beat us to 60K. So the price of BTC reaching 60K before our subscriber count. Is that a good thing or a bad thing? I feel like it's a good thing, but also slightly upset about it, given we've been stuck around the same number since 17K as well. So
I mean, it took Bitcoin like 10 plus years to get there.
That's true.
So suck it, Bitcoin.
Institutional adoption of Technical Roundup viewership.
Exactly.
Before the show, you were complaining. Well, first of all, why didn't you stream on Wednesday or Thursday? Wednesday I can forgive because Valentine's Day. Thursday, you just disappeared. And then at the start of this call, you were complaining about how busy you've been, how life has been beating your ass. Is it because you're sidelined? So you're sieving, coping, and making stuff up to not have to look at the market? Is that what it is?
Oh, that's the only reason, yeah. No, it's a lot. It's been like, I mean, we moved into this place not too long ago, and now it's just setting everything up, carrying shit around, doing all that kind of shit. And then also on top of that, a bunch of friends and family keep coming, which I mean, it's nice, but
let the record show I've not been invited, nor have I.
You have been invited 10 times.
You said friends, family, but not co-hosts, so I kind of feel out of place, you know.
Fair enough, fair enough. No, but it's been a lot. We're getting through it though, so.
Sounds like the epitome of first world problems, doesn't it? Like, oh, it's just this new place and there's so much stuff to get for it and everyone wants to come see it and hang out with me and my family. Oh, God, it's so difficult.
I mean, yes, but also do that on like 4 hours of sleep every night. And then like everything has a little bit of a different kind of vibe to it. You know?
I can't do a single thing on 4 hours of sleep, so I think I'll pass on that one. Yes. BTC, Don, it's above 50K. This is really cool. It's just kind of mental, but also very cool. I keep going back to the idea if we were racing hamsters and people were talking about no news cycle and how it can't go up because of macro, like even a little bit. And here we are now. You recently did a mini victory lap of sorts when you resurfaced your 17K tweet with the now historic risk reward meme tool. And you said, look at the comments. As a, you know, the benefit of hindsight. Was there anything particular in terms of either sentiment or specific comments or just lessons that can be learned from that bottom formation and the sentiment and the comments you're receiving and the arguments being made now that we have the benefit of hindsight?
I mean, yeah, people were like all over macro, right? Like everyone was like, macro is dooming us all. The market cannot go up. Not really realizing that this is a tiny market. And it's still a tiny market, even at 52K, right? I mean, it's now significantly bigger than it was at 16, obviously. But yeah, people are just like, they get lost in the sauce a little bit. And I feel like a lot of people do this, where they just kind of like adopt the current narrative. Like if it's doom or gloom, or if it's like being too hyped. Like, for example, now, you could make the same argument with like, okay, we have the ETF, now we have to go to 150K in a straight line. And it's just not how it works, right? So we had 16K and people were like, oh yeah, macro is going to take us down. Now the S&P made new highs and Bitcoin is very close to it. And you'll see the same thing when we get closer to a top where people are like, we cannot go down. This is new paradigm. And then, yeah, it's probably going to shit the bed at some point. It's just people are too certain of the current narrative just going on forever, basically. Not realizing that the moment the narrative shifts, stuff moves very quickly, right? It took us 1 year, basically, for price to triple from the bottom, which is fucking nuts. Yeah. And I mean, it didn't take us much longer to go from 70K before to 16K. That was also like a little bit more than a year, you know. So yeah, shit just moves fast, and you shouldn't be getting too complacent about wherever the market is and what it's gonna do. Like if you feel like you're certain what the market's gonna do, you either bet on it. But most of the time you should just be running, right? Like if you're like 100% sure where this is gonna go, you're probably wrong.
So an important lesson would be narrative certainty and complacency at the same time, right?
Yeah.
I think that's a really good one to draw. I agree completely in terms of it working both ways, where there might be some version of you live by the ETF and die by the ETF. I think we will inevitably at some point reach a sort of time window where a lot of the sell pressure is coming from those ETFs rebalancing and those same buyers taking profit or whatever else at whatever price point that comes. And then I think it'd be a really good sentiment indicator when people start fudding the ETFs, being like, "Oh, look, they got so many of the coins and now they're dumping. Please stop dumping on us." I think that would be a quite funny one. But I think in terms of the ETF narrative itself, I agree that inferring that just because we have the ETF now that we can never go down, I think that's a very weird argument to make. To me, it's just the super cycle repackaged into something else. Now, of course, there are material differences between having this product which opens up the market to such a new investor base, so on and so forth. But crypto people just love to latch onto something and then make really strong conclusions that because of this one thing that might be transient, might not be, or whatever else, it can't go down, which can't go up rather, which was the macro example, and then can't go down is going to be the ETF example. And in the past, it was the super cycle example, and then on the other side, it was interest rates, and then it was DeFi. Those native yields and all that type of stuff. We always just find a reason that justifies what the market has been doing and use it as grounds for why it's going to continue to do that same thing. And I think that second step is the particularly dangerous one,
Yes.
like letting a narrative just get so entrenched in your head that you can't even consider alternatives. I'm also really interested to see how price sensitive is this new ETF holder base? That's a very interesting question, right? Because they've sort of hoovered up tons of coins. And a lot of these sort of, maybe passive allocators are not going to pay a ton of attention. But also at the same time, a lot of the upwards price action, it's not just like the ETF comes in, there's demand for it, and the market goes up. There's also people shorting, getting blown up, and speculators still buying on the ETF narrative and using the inflows as a proxy to bet long, right? So you can kind of you can sort of split up the inflows to some extent, like real material inflows from the ETF, which are massive and they're a big deal and they're accelerating, and those numbers just impressed me certainly and beat my expectations. And I wasn't ETF bear-tarded by any means. I just thought it would take longer. That was my argument, and that was wrong. They just hit it straight away. But it's not just that. You then have people still speculating on that same thing, sort of crypto natives, smaller funds, traders, etc. And you also have short liquidations. And I think it's a worthwhile distinction to make between those categories, as opposed to, because if you don't, then you fall into the trap of, well, we have an ETF now, so we just go up forever. What do you think of? I mean, I mentioned that I was wrong in terms of timing. Mostly wrong anyway. I thought that there would be some sort of lull, pause, or at least a slower period for these ETFs to start accumulating aggressively. But this shit just came right out the gate and has no signs, showing no signs of slowing at the moment. What do you think of the ETF, both narrative, but also like the physical inflows, demand, and buying of coins? Where are you with the ETF meta in general?
I mean, I think it's very like I was also surprised by how quick this went. I also expected the same as you that this was going to be slower. I think it's bullish generally, quite so actually. Just opening, I think not necessarily even the ETF itself, but just in general how much credibility this gives the space, right? When you can say like BlackRock's in this and they're heavily promoting it, and then like all these asset managers are going to be kind of like talking about it at least, and like you have serious institutions offering this, which changes the vibe quite considerably in my opinion. It basically makes it from like a fringe asset to something that is more legitimate, and I think that is just going to change the opinions of some of the boomers. So I think that's quite bullish, and it will remain so. I think in general, like I don't really see like too much negative out of it, other than the fundamental side of things, where if you have a bunch of ETFs that hold all the Bitcoin, I mean, what's the point, right? But
these are like
that,
individual holders within the ETF, right? So surely it's a bit more diversified than that. They're holding it on behalf of their customers, and their customers.
Yeah, but I mean, they're holding it.
Yeah. So is this like a custody argument or a diversification? Yes. Okay, I see. I thought you were going to make that whole weird conspiracy thing, like, oh look, you know those TikTokers and people who are financially illiterate being like, oh, Vanguard controls all of these companies and they hold so many shares. It's like, bro, it's just people investing through Vanguard, and yes, you don't get your full voting rights or whatever, but it's not like there's just one company that dictates how I don't know, these massive American megacorps do their governance. I thought you were making that type of argument. No. BlackRock itself is scooping up Bitcoin. It's like, well, it's just individual investors and indices and funds, whatever, doing it via BlackRock, right? So is it the custody side? Is it Coinbase specific that you don't like, or just in general?
I mean, yeah, if you have most of the Bitcoin like basically bundled up in these kind of offerings, you know, like in the same place, even like no matter how secure it is.
Yes, sure.
It just kind of rubs me a little bit the wrong way, but I don't really care about it too much, given I'm like, I largely care about price, right? And I think this is,
how dare you?
this is bullish for price, which makes the trading better, and the opportunities in this space better. So I don't really care too much. But yeah, I think it's just a good thing, and I don't think that narrative is gonna end anytime soon. Like the ETFs in general, all over the place, right, are getting more and more hyped. Something that we've been seeing in the traditional markets too, right, where we've seen a lot of money move into ETFs in the last few years, and I don't think that's necessarily gonna stop. So this is just like a good tailwind to have.
And the Bitcoin ETFs are killing it, right? Like even relative to everything else, just from launch and inflows and trading volumes, it's really been an incredible start. You said there's nothing negative about it. Do you want to hear a really terrible argument that I made to a friend and found it quite funny? It's essentially that we had the bottom, right? And then you have like the OGs, whales, etc. redeploy. And then you have the crypto traders redeploy, and like the smaller, more nimble funds, etc. Then there's the ETF announcement, and you have that same pool of participants start to deploy. Then the ETF comes to market, and then you finally get that institutional allocation, while also being supercharged by shorts getting blown up, and that same initial group continuing to buy. And then retail comes in and buys the top. But Don, at that point, there's no one left. We've gone through the population of the earth, right? There's like, the birth rates can't keep up. You've had like the OG whales, the crypto natives, the crypto funds, the institutionals who are early and aggressive to it, and then retail comes in and buys the top. The institutions dump on them, and there aren't enough humans left on planet Earth to buy. There are no more buyers, Don. That's how we run out of green candles. What do you think of that very complex, carefully considered argument?
Because at that point, like the old people are gonna die, and they're gonna like the young people will inherit their money, and then there's more.
Oh, that's such a good point. I love that.
So,
the inheritance bid.
Yes, it's the moment the old people die, we're gonna get an extra bid,
and it just goes on forever until we solve for aging.
Yes,
but then we have AGI, and Bitcoin is used by
I mean, the aliens are gonna buy next. Dude.
That's true. The alien. Oh my god. Okay, you've actually solved this. I'm so happy now. I can sleep at night. We've got the inheritance bid and then the alien bid, at least.
Yeah, and we just have to hope that the aliens didn't come up with Bitcoin first. You know?
That's true.
If they have the longer chain, you know.
Jesus Christ. Should we look at a chart, Don? Because at the end of the day, no one. I was going to say no one cares about this part, but I care about it, and it's fun. And I go back and forth on the comments being like the show starts at X because they are fucking hilarious. I always laugh at them, but at the same time I'm always conflicted as to how much do people care about the rambling chatty catch-up stuff versus, hey, here's the monthly chart, it hasn't gone down in a year, enjoy, you know. But let's do it anyway. Let's do the ritual, Don.
Yes.
Monthly time frame. That's a lot of green candles.
Yeah.
You remember we made fun to some extent of the topping candle of the last monthly close. That was just kind of a weird out of context consideration. And now we've fully engulfed that, obviously. I still think the sort of monthly range high at 58K is interesting. And then the mid 44, 47 cluster can become interesting depending on either if we just nuke below it and fail this month, which is, you know, we've got 2 weeks left. That doesn't seem super likely to me to be sub 44K in such a short time, but you know, it's crypto, whatever can happen. So I think that level can become relevant if either we just get stuffed and nuke below it, and then this month ends up just being a spike of our previous month's high and it looks terrible and the whole thing is garbage, or I can become interested in this level if we push significantly further away from it first and then nuke back into it. But otherwise, where we are right now, I think 58 still cool, still makes sense around the monthly high, round number, all-time high, proxy, breakout trade, all of that type of stuff is interesting. But mid 40s only become interesting if we come back to it after going much higher, or if we just turbo nuke through it. Do you have any monthly levels that you think are currently in play, or at least reasonably close to the market?
I mean, the funny thing is 58K, the one that I've been talking about as range high, is the only realistic resistance, is now actually pretty close.
Yeah, it's fucking close, isn't it?
Yeah, it's quite wild. So I think that's significant. I don't think if we got there, I think it'd be for a wick mostly. I think that'd be the top for a while.
Why the triple top? What's the argument?
And I just think it's like it's the most obvious spot to sell, and I don't think it would be like a trend forming top or anything like that. I just think it'd be a pullback top. And I think the reason why I'm saying like a wick to it is just because, yeah, I think that you'd get a quite heavy selling there just pretty much immediately. And then you'd get a decent pullback maybe towards like 46, maybe towards like even lower levels. I don't know. But that's kind of like the nearest resistance that I'm looking at. And then in terms of support, it's still the same old, like 35K is the level that needs to hold. And then you can argue about like 45, 44, that region.
Mm-hmm.
But I'm not too interested in that. Like anything, like either like the resistance at 60, which I think would be, or like 58 to 60, that would be interesting. I could see a short actually be play there. I'm most definitely not going to be shorting, but like if I had to make a play at 60, it'd be shorting, not longing. And then, yeah, anything else, just kind of have to use the low time frames or hope that something catastrophic happens, takes us to 35, 36, which would still be the best level.
This is the European mindset in a nutshell, right? Hope something catastrophic happens just so your thing can go to support.
Oh, but I mean, I think everyone should be thinking that way, because then they can buy more.
That's true, but no one actually does that, right? That's why, to some extent, levels work. How many times have you and I heard the argument of, oh, well, this is a really obvious level, so it either won't work or it'll get front run, which is like such a bad argument. Yes. But most of the time, by the time, you know, usually people plan this out in advance, so the market's much higher and the support is much lower, or vice versa, whatever. And then by the time it actually gets there, it's so scary, or it got there so quickly, or, you know, they became so over leveraged when it was above or below, that when it actually gets the support, they actually flip bearish a lot of the time. So it's like, oh, yeah, this would be a great buy. And then like 6 weeks later, the market gets, then they're like, oh, it's over. Market structure's fucked. You know, this recovery is going to take decades. Fuck it, you used to talk about like decades long chop on one of these shows, didn't you? I don't remember what price point it was. Like, yeah, I could see us go sideways for 10 years. I was like, fuck you, dude. I've not got 10 years in me for this shit. 10 years of casual Friday sideways? Like, come on, man.
I mean, to be fair, right, we've been already going sideways for, like, technically, depending on how you look at it, for like 3 years now. We're still not. We still haven't made a new all-time high. It's a little bit of a sideways thing. Bitcoin does this quite regularly, where it does like a long stretches of sideways, like from 2017 to 2020, like technically all of that was sideways and then made new highs, and same thing here. But yeah, I don't know. I think in general, like if you would want the 10-year sideways, I think it's gonna be like underneath 100K. Like I think 100K is gonna be the biggest resistance you're ever gonna get. So, like, if you want like even longer sideways, I think that's like the area where it starts getting ridiculous. For it,
Don, you know, the longer the sideways, the better.
But yeah, no, I'm just generally, I think the monthly is not that interesting.
I mean, when you have 6 green months in a row, you're not going to get good monthly setups, right? Just like almost by definition. If you get monthly nukes, that's where it's at. If you have 6 green in a row, you know, the argument would be, oh, just momentum trade or trend follow, but you don't fucking momentum trade on the monthly. You know, it's not what it's.
No, you cannot. Yeah.
So I agree on that front. So yeah, pretty much 60K or giga nuke 35, 37. And
Which
then
I think is unlikely for the record.
Sure. I know, I love how traumatized you are by this, that whenever you mention a support level, just even completely randomly, a ton of your comments become, oh my God, he's calling for whatever the support level is.
I cannot with that.
It's like your least favorite thing in the world. It's so funny. It's like, God forbid you mention a level exists. It's like, oh, he's short now and he's targeting that support level. It's like, what? No, none of that is true. Fine. So the big ones are 60 and 30. Don't think 30 is particularly likely. 60 is more likely than 30, I'll say that much. How's that for a bold prediction, Don?
Oh, yeah. Wow. So ballsy.
And then the mid-40s are your kind of intermediate fuck around and find out type of maybe support, maybe not pivot. Is that fair?
I think like on the weekly time frame, if you go and check that out, anything between like 41 to 44 now, like that kind of chunk of consolidation.
The ETF range.
Now. Yeah, I think that's pretty decent support now. That's kind of like if you get a pullback, if you get a quick pullback, I think that's going to be interesting for at least a bounce, right? You never know if it's going to be, you never know if it's going to be more than a bounce. So like all of these bets are always just kind of like you buy because you're expecting a bounce. And then like if it bounces and it does like even more than bouncing, you're like, oh, fuck yeah, I bought the bot. You never know, you know? Like there's something that people always talk about that I find a little bit odd. Like they're like, oh yeah, I'm just gonna buy the bottom and I'm just gonna hold. But you never fucking know if it's just like if it's the bottom or if it's just gonna like go up a little and then go back like further down. So what you do is you just buy, you pray, and then you kind of analyze wherever the fuck like a little bit higher, whether it's actually bottom structure or if it has like more momentum than you'd expect from a bounce, all that kind of shit.
Yes. Yeah, you don't know if it's going to be trend
after.
reversing versus just like a dead cat, basically. Right?
Yes, exactly. Yeah.
I think that's completely fair.
You just wait and see, basically. And it's always like that. I mean, sometimes you can make strong guesses whether something's a bottom or not, but you never 100% know. And everyone that says they 100% know is lying, in my opinion.
Lying, in my opinion, yeah. Fair enough. So you think we've pushed far enough away from this ETF range now on the weekly for that to be a valid support? So at the moment, we are, what, like 15 to 20% away? So I'm guessing that's evidence enough that that's a valid technical structure / cluster.
Yeah, at least short term, yeah.
At least short term, yeah.
And then long term, like the only sure buy that I have, right? And like I said, I think it's very unlikely, but that's the thing, right? Like whenever you have something that is very, very unlikely, if it does happen, it's usually a great buy, right? So the only thing that I'm like very certain about that it's going to be a good buy is like weekly and monthly support, which is 32, 35K. I don't think those are going to hit, but if they do hit, like that's the kind of buy that you just hold and you're guessing that it's going to be the bottom, just because it's such an important area and it's a nice kind of 30-40% pullback away, which is quite clean. I like that. So that be brain dead long or like brain dead buy, anything like in the 44 to 41 range, that's less of a brain dead buy, but obviously still like good support. So that's where you can just take a gamble, see if it sticks or not.
I think those are good levels, and I agree with you. I made the argument that once we break out of this ETF consolidation thing, just kind of take it at face value. We've kind of faked out both sides during the ranging period itself. So once you get a breakout, you can just, until proven otherwise, assume that it's going to continue. That at least has played out somewhat. So there's me patting myself on my back a tiny bit. I had that sort of level-ish at 50, what was it? 51.8. Do you remember that shitty weekly close?
Yes.
From I don't know what the fuck that's going to do. The answer is probably very little. But
again, we're struggling with it right now.
We should just like go offline, because as soon as we start recording and talking about resistance levels, very annoying things happen. But I agree. Like I think 52K or this 51.8, whatever, it's kind of a shitty version of the mid 40s support, where it's like not a particularly clear high time frame level. It's not the best one. Doesn't have the most confluence. But when you get a lockout trend like this, you kind of look at something rather than nothing, right? Like is 42 to 44 like the best support? No, because technically speaking, still within the realm of reasonableness, the mid 30s are better, right? But when you look at how this weekly structure is developed, it just hasn't pulled back at all. Like zero. That's the most impressive thing about this weekly trend for me. It's pretty much just been breakout consolidation, breakout consolidation, breakout consolidation. We haven't had like 2 consecutive lower low close weeks pretty much ever, or like since the ETF period. I don't count the ETF weeks of the the 8th of January and the 15th of January, because that didn't even break the range low, right? That didn't even break weekly market structure. It just like tapped the weekly range low and it closed inside it. And this pattern has been intact since like the mid-20s. Isn't that insane? That's when the last high time frame pullback was. It was at 25K. And now we've 2x'd with no weekly pullbacks, which is really fucking impressive. So I think looking skeptically towards any level of resistance for the time being is also justified. And then also in these types of strong trends, you might as well kind of move your supports up with the market to some extent if you want to at least trade with a higher frequency or trend follow, right? Because it just doesn't give you anything else. I think we've spoken, maybe we did a bad job of communicating this on the show, but there's always a difference between this is the high time frame level, where if you get a high time frame pullback into it, you trade. Otherwise, you have to trend follow on lower time frames. And I think that, to me at least, that's a clear distinction. But I think at times that was interpreted as if you don't get a high time frame level, it's bearish, or it can't go up without tapping the high time frame level. And like none of that is true.
No, it's better if it doesn't.
It's better if it doesn't. Yeah, I agree. Just like break it and fuck off,
Yeah.
And then build a support somewhere else. So that's the weekly time frame. In terms of levels, 41 to 44, the ETF breakout range is the only relevant-ish thing. 52K is a bit made up, but if you want to short-term trade or have something rather than nothing, it's okay. But I wouldn't bet anything meaningful on that resistance personally, unless the weekly close or the next couple of weeks of price action really suggest otherwise. But on the other end of the range, I think there's overlap on the weekly at 58, 60K, whatever. Just that all-time high, range high is the same level, right?
Yeah.
Is there anything on the daily that you think is worth traders' attention? I think the last time you were active was a really good call around 44K. We essentially had that breakout, and I think the argument at the time was this is one of those time frame snowball type of setups, right? Where the daily breaks out, that's a decent, and the weekly's in a good spot, and the monthly's in a good spot, and this is kind of your early warning system, but for bears, an early entry system for bulls, if you will. I think that played out really well. But that's quite far away now, relatively. Getting back there would take us to the weekly and daily levels, whatever. That's like 15, 20%. That aside, is there anything on the daily that is close to us, that's accessible, democratic?
No, I don't think so. I mean, there's like supported like 47 if you really want to force it.
You really want to, yeah, that's what I talked about as well.
But like I think in general, like basically that 44K level that I like talked about, where I was like before we broke out, I was like, this is hitting it too many times. At some point it's gonna go, and then it went, and then I was like, just assume it's a proper breakout. No reason to think that it's not, given the trend and given the narrative.
Yes.
And I think like as long as you don't undercut that, as long as you don't go below 44, it just makes sense to be on the bullish side of things.
Yeah.
Now obviously that can, like, that level of like, okay, if it goes below this, it's starting to be a little bit on the bearish side, can walk up, right, with price. Because let's say we go sideways here at like 52, you can make the same argument just higher, and then that whole structure moves, so you're not as exposed to something. But for now it hasn't, in my opinion. Like we could still go towards, like, I don't know, I think we could pull back to 47, 46, 45 even, like with a wick, and still be bullish. It's just like if you start closing below 44K on the daily time frame, that could lead to a close below 44K on the weekly time frame.
It's the same snowball, right? Just in reverse.
Yes.
Yeah.
And then you start having troubles, right? Because we basically had a high time frame range breakout to the upside. You don't necessarily want this to pull back too much.
Yes.
And if it starts kind of pulling back all the way back into the range, then you would assume that that's bad news. So I think
changed, right?
Yeah. And it can always wick, right? Like that's the thing. Like this is something that where people are confused, but it can always, like, this could wick towards 42, 43, whatever. on the high time frames and like have like a little bit of a fake close below the daily level. But I think this would be an early warning sign, basically. And then if the weekly doesn't turn into a wick at that point, you'd be like, okay, this is actually going to go forward for like 35 ish. And then you have that. But I think in general, unless that happens, it just looks decent. Even if I think it's getting a little bit exhausted now. Based on my gut feeling.
Fantastic.
But like it's run quite a lot, and I wouldn't be surprised if it just slows down a little bit. But just based on the TA, I don't have anything. Like this just looks decent, and you should be expecting higher unless it does something bearish. It's the best way to go when the trend is this strong and it's such a lockout. So you wouldn't necessarily get a re-entry. Like when it's shopping, you get a re-entry no matter what, right? Like you can take trades and then you can close them and you're like, okay, I'm just going to come back in 2 weeks and it's still going to be there. When the market is trending like this, you don't necessarily have to get a re-entry. So I think in those kind of conditions, you have to be a little bit more careful on flipping too early, as in it's better to give back some of the profits than to give up a position most of the time.
Especially if you've got really narrow criteria for re-entering in general. Yes. That's I think is a distinction that a lot of people miss out on. Like you can trade manage a lot more conservatively and actively if you've got sufficiently loose entry triggers, right? Or if your system just allows you to trade, let's say, in the middle of nowhere. What you don't want to do is to marry two opposite approaches. Again, this is speaking from experience, trust me. And the two opposite approaches would be you have pretty damn narrow entry criteria, but at the same time, you have very loose trade management criteria. And I think that's a really fucking bad combination. Because the underlying logic should be that if you have narrow trade entry criteria, they're narrow for a reason. And ideally, that reason is that they only trigger when there's like a very high probability or favorable expected value for that trade. And if you're right, because it's sufficiently low frequency and high probability, it shouldn't need that much management, right? Like let the fucking thing play out. It doesn't happen that often. And so the trap that I used to fall into, and I still do it to this day, just hopefully less and with less of an impact, is that if I get like a good high time frame entry that meets those reasonably narrow criteria, I'm much more reluctant to manage it because I don't want to sort of stifle the signal, right? So I think there should be some sort of relationship between your entry criteria and your management. In general, if your entry criteria are broad and loose and sort of give you a decent amount of trading opportunities, then knowing that frequency is going to be higher, you can also manage more actively. At the same time, if you have much stricter criteria, hopefully for good reasons that these setups are lower frequency but higher probability, I think your management in general should be a bit more passive to let the damn thing play out. What do you think of that?
No, I 100% agree. Well said.
Okay, we've done one useful thing on this show. Now we can just like talk shit for the rest of it. No, I agree with regards to BTC. I did make the argument on Monday markets about 46, 47K being like a decent updated invalidation. And the idea there would be that if you're sort of positioned in the middle of it, you can use 46, 47 as invalidation. And then if it goes to the 41, 44, that's going to be like one of your buy opportunities, right?
Yeah.
So you don't sort of confuse those two trades where it gets to 44, 40, 41, 44 or whatever else, for example, and you're stuck managing a trade when you should be entering a fresh one at the same time, right? So that's why I quite like the separation of 47 as an early warning system, and then 41, 44, where you sort of crack your neck and think, okay, well, this is the first weekly pullback. Let's see how fucked I am.
Yeah, I like it.
That's BTC. The 4 hour is just gone super sideways. What do you think of that on the spot analysis? Gun to your head, go.
I mean, that's something that's been doing the entire way up. It's hilarious because we've basically been seeing a bunch of this ETF dip buying, which is basically like you don't get dips, you just get sideways.
Right.
But yeah, gut feeling, this is a little bit exhausted now. So I guess there's a good chance you get a little bit of a pullback in the next couple of days, but I could be very wrong on that. I'm not really the low time frame kind of guy. For me, like the weekly time frame is low enough.
You can barely keep up with that.
But yeah, looking at the 4 hour, it feels and looks exhausted to me. We've had a bunch of pushes up. So maybe we get a little bit of chop, maybe we don't.
You fucking
My
look
feeling
and feel
is,
exhausted, mate. I'll tell you that.
I mean, that's literally, maybe I'm just projecting
You're
my
projecting. Yeah.
my exhaust. I mean, at this point, who knows?
But is this like a 90% sentiment thing? We just kind of look at the chart and maybe, I don't know, browse Twitter and via osmosis are like, yeah, it's a bit tired. Is that it? Or is there any, I don't know. Is there
No,
anything else
that's
to
pretty
it?
much it. Yeah.
Okay, fantastic. I'm sure people can learn a lot from that.
Yeah, I mean, that's no
This
one
is the
should
fucking
be.
difference, right? Like, I will sit here and on the fly craft a theoretical framework for the relationship between strictness of entry criteria and trade management and still fucking lose money. And you'll show up with your fucking surfboard being like, hey, bro, just the vibes, bro, and make 50 times more money. Like, I hate trading.
I mean, I think the vibes are a large part.
No, I agree. I completely
I
agree.
actually think the vibes are pretty much the most important part about markets. You need to get the vibes right, and then you're gonna be okay.
Thing is, that sounds like some hippie shit, but I actually agree with you completely, because I think people are too dismissive of the term like vibes or gut or instinct or intuition. But really what that is to me is basically having internalized thousands upon thousands, tens of thousands of trades, tens of thousands of hours of screen time. You have this sort of innate subconscious pattern recognition that manifests itself in vibes. And I think that's, at the end of the day, to a large extent, what your gut feeling, instinct, intuition is. There's a reason that you should distrust your instinct and intuition if you're sort of untrained or you have no trading experience, because your instinct and intuition are going to lead you down a bad path of just fear, FOMO type cycles. But I think if you're super fucking experienced, then you're not going to have the same intuition as someone who's just started out. And so by inference, your intuition is trained as a product of your experience. So to some extent, at least, it's a manifestation of all your exposure, all your experience, all your screen time, all of that type of stuff. And that's got to be fucking meaningful after a certain point, right?
Yeah. I mean, you can obviously kind of quantify it a little bit when you're like, you can, at the start of your journey, you can just be like, okay, I'm just gonna, like, I get this feeling, I'm gonna write down what I'm like, what my gut feeling is, and kind of see how that goes. And then you can just look at kind of your track record on that front and see if that works out for you or not. Because I think some people do better with just complete and utter like strictness in their trading, and other people do better with a little bit less of that strictness and a little bit more of kind of like I said, the vibes. And it's something you just kind of have to figure out, like what's your natural tendency. Do you get stuff like more technically right, or do you get it like with kind of like feeling? And I think everyone's a little bit different on that front. Me personally, like I used to do it very strict and very kind of
Systematic,
rules orientated, yeah, and systematic, and that kind of did okay. Like I did okay. I wouldn't, like, I'm not complaining. But ever since I basically went more for the vibe approach, like my trading's been more relaxed and just generally easier, and hit rate has been much better. So that's what I'm going with for now. But it could obviously, like, if it goes to shit too long, right? So far, cannot remember the last trade out that I missed, other than selling too early. But if it goes to shit at some point, there's a good chance that I'm just going to be like, okay, now I've ridden that high long enough. I'm going back to very, very strict.
I actually don't believe you at all. I think if your gut stops working, you're like, fuck it, I don't need this anyway. Like, I'll
You mean like I'm just gonna be like, okay, fuck it, time to retire?
Yeah, something like that, or just like the vibe. I mean, the vibes will start working again at some point, or especially because if you trade monthly and weekly shit, right? Like if you go through a spell where the vibes aren't working, I have a hard time imagining you going back to like fucking systematic candle close wick breakout shit. You'll probably be like, whatever, man, I'll come back later, you know?
Probably,
because
right? It's so tedious
it's
in comparison.
I would say that I agree that there's sort of individual differences when it comes to where people fall on that spectrum. But if you're discretionary, I think the general trend is from super systematic to more discretionary, right? It's almost like you earn the right to exercise your discretion as you become more experienced. So I think the average curve looks like you start on much more on the systematic side because you've got no intuition, you've got nothing reliable as far as being outside of your system. And then as you gain experience, you can kind of start to feed in your instinct, intuition, discretionary stuff, and basically earn the privilege of going outside your system. When you just start, there's no point because you've got no sort of reliable indicators to tell you when you can ignore your system or when to override it. But with time, I think you earn that right. So most people who are in the discretionary side of things, sort of non-automated, non-systematic type of stuff, I think they start strict, and then as they learn, they loosen up. At least that's my experience. That's your experience from other traders I've spoken to. That kind of seems to be the vibe. And I think it has to be in crypto because market structure just fucking turns on its head every 2 years or something, you know? Can't be super systematic if all the products you trade and how the market trades generally just changes so much. At a certain point, you have to sort of vibe it through or override your system. God, this is the most like hokey pokey fucking hippie metaphysical episode we've done, but at least it's honest.
Yeah, I mean, yeah, we'll just either it's that or it's just the luckiest streak ever.
That's true.
And it all goes to shit, and it's all been just like terrible trading,
just
rescued by luck.
Yeah, amazing. Well, the more frequently it happens and the longer it lasts, then, you know, the higher the probability that it's not just noise, right?
Yes.
So at least there's that. Don, ETH and altcoins are red for the day, at least most of them. That's the interesting one. Let's take a look at ETH BTC first, because you like that chart, you like this asset, and I think 90% of your trading volume is in ETH BTC. Now,
is it?
Is it? I don't know, man. Looking at this thing, so the weekly is green. That's bullish, right? That's the extent of my analysis.
Oh, that's the extent of Twitter analysis too. To be fair.
Okay, listen. Our laughing track at ETH BTC is going to be used at like in some fucking edited montage when it's up 80%. Let's review one of the arguments that was presented in Technical Roundup. Notice how I said was presented as if I didn't fucking write it. Just in case it goes to shit. I didn't, you know, we outsourced Technical Roundup to Fiverr. It's not our fault. In any case, the argument there was if ETH BTC is going to catch a break, rather than ETH USD being just dragged higher by BTC, which results in a weak ETH BTC, even if BTC and ETH go up, the argument was that ETH USD is on the cusp of a weekly breakout through 2500. There's a meaningful amount of space until the next high time frame resistance or the other side of that range, closer to, I don't know, 3300, and that's pretty conservative, right? And so the argument was, if ETH BTC is going to catch a break, rather than being dragged by BTC, it could find some of its own strength by ETH USD having a more sort of aggressive gap fill type of move. Is the jury still out on that? Are you still waiting for like weekly close and next week of price action to see if that argument is going to be vindicated, or were you expecting more already at this point, given we're trading above the level for now at least?
I was expecting more, but also like to give us a little bit of credit, like we talked about ETH BTC twice, and like once was the Pico bottom for now, where we're like, okay, now it's not too dumb, and that was like the 8th of January, or like the on the weekly candle, that was basically like the 9th or 10th, whatever, doesn't matter, before the big move up. We're like, this is not the dumbest trade. And then it moved down and did the new low, and pretty much at the Pico low or like very close to it, we're like, I mean, now it's not the dumbest trade anymore, just based on basically that whole argument that you just made with ETH USD dragging ETH BTC higher.
Right.
And that is also the only 2 green weekly candles ETH has.
Thanks for playing. And also bearish for like the entire fucking year, if not longer. Like
yes, but basically,
yeah.
I mean, I think that was actually like an excellent call, just being not as bullish as everyone else on ETH BTC, just being like on the other side of that, because I think a lot of people just kind of missed a lot of the rally sitting in ETH. But yeah, I think the ETH USD breakout above 2.5K, that was the chance for ETH BTC to kind of outperform. It led to the only green weekly in a while, but it's a fucking sad weekly, and it's into resistance too. Like if you kind of map out the 25th of December candle, that should have been support. It's not resistance. It's not great, and it's also back to the diagonal that we have all the way back to 2016. So it's testing that for the 2nd or 3rd time, depending on how you count, in a very short amount of time. Is not good. Like that just generally doesn't look that good. So we're back towards the whole, I think it needs to go back above 0.06 argument, like 0.06 plus, and we can talk about ETH and ETH outperformance. Until then, I don't know. It just kind of looks sad again. And the one chance it had this week has been lackluster, to put it very, very kindly, I think.
Is it too late to rescue? What about next week? What is it about this week that is your mental
this is the breakout week. Maybe it pulls and goes higher, but I think like this is where it should have ran over people and kind of squeezed ETH BTC as well. The fact that it hasn't, it just has me a little bit defensive. Now it's a little bit higher than when we made that whole argument. So
that's it. We were right.
Yeah, that's a win in my book.
Stop to break even.
But that's, for me, like I don't see I think it's a retarded trade again, basically. God. And the good trade is above 0.06 now that opportunity is wasted, basically, because it was perfectly set up and it just didn't do it. And then I'm just going to be more defensive. Now, it can still go up. Like, I'm not saying it cannot go up. I'm just saying, like, I don't see a good trade opportunity anymore.
Okay.
And I don't really see the point in trading this at all, just based on how shit it's been trading.
So you're saying because of the macro, ETH can't go up?
Exactly.
Respectfully.
Respect. I mean, like, it has the narrative. It has everything, you know? Like, it has the potential ETF. It has all of that shit, and the chart looks like complete and utter ass. And I just wonder why. And I cannot give you a good answer for it. I mean,
probably the best answer is some version of, well, I think it has to be BTC ETF reliant, right? Because like if you looked at ETH USD in a vacuum, I mean, yeah, it's been a bit slow or whatever, but it's up a shit ton and it looks all right, at least, right? It's just very fucking hard to keep up with BTC when you have those real spot ETF inflows and people buying on those real spot ETF inflows and liquidations from people on the wrong side of the first two groups. So could it just be a sort of mechanistic explanation where BTC has this thing and people are trading it and using it and there are real inflows into it and ETH simply doesn't?
I mean, markets are forward-looking, you know, like usually anyway. And Bitcoin had very real flows on the ETF. So I guess that people would just, like, the ETH is much, much smaller than Bitcoin, right, at this point.
Sure.
So it'd be much easier to move. So even if you have like these inflows into Bitcoin, like it takes a substantial amount less of money, like whatever, I butchered that sentence.
No, you got it, it's fine.
It makes sense. To push ETH up, right? So the fact that it hasn't, and the fact that every crypto native has been trying, basically just makes it into a tough trade. Now, like, I want to be long ETH, don't get me wrong. I think in general that just makes sense as a trade, just based on like the Bitcoin ETF made price go up. The ETH ETF is probably going to make price go up even more. But I'm just like, I'm struggling with buying this chart, and I'm struggling with finding any strength in the ETH BTC chart. And even the ETH USD chart is lackluster based on how good Bitcoin's been trading, right? Bitcoin looks completely insane. And then you look at ETH and it's just kind of like, you can tell that this doesn't, like, it didn't really want to go up. It just was forced to by Bitcoin, which is just a sad thing to say about ETH, because usually ETH trades a little bit better than Bitcoin does. But yeah, not now.
Yeah, I think there are a myriad of reasons for that. We spoke about the potential impact of, you know, BTC has a spot ETF, ETH doesn't. I think you raised a good point about the forward-looking nature. I also think in the past, our assumptions on ETH outperformance were sort of predicated on all the gambling Ponzi stuff being done on ETH primarily, right? But that's migrated to a large extent to other chains, Solana being the most notable example. So it sort
but that's out underperforming too, right? Right now,
yeah, for sure. Recently, it has been. So it's just really tough competition, right? Like if you're ETH, people want to speculate, and so the obvious strength in BTC with a real ETF that attracts flows. Then the Ponzi meme coin, whatever stuff on Solana, and its own sort of meme coin ecosystem that attracts flows. And then even for the ETH heads, rather than buy ETH, they kind of leapfrog over it, something we wrote about in Technical Roundup as well, and start buying like Arbitrum, Optimism, locking up their money in Blast, Eigenlayer, etc., etc. And it's like, wait, what about the base chain here? You know, it feels like it's being pulled from all directions at the moment. You know, it's got competition from the outside, and then even the ETH native money is going to other places that's not ETH, you know?
Yeah, it's a little bit of a... I mean, ETH's just kind of like very, very slow right now, as in like very slow to move price action wise, and very like people are just like the space moves so fast now that people are just like, okay, fuck it, it's just too slow for us. Like even if this would move, like it's gonna move like 2%, so let me see if I can buy Solana for 10. And I think that's one of the bigger problems that ETH has right now. Like
the midway trap, I think you described it perfectly months ago, and it's still very much in play. And the scary part is, like, there's still a lot of, like, it's very hard to reconcile with one of the other arguments that's popular, which I broadly agree with, that like the full retail flow isn't back yet. So you'd assume that if you had like more seasoned crypto native funds, etc., they'd be the ones, at least from historical data, that would be into ETH because of previous bull markets that they were there for, right? And then you'd expect that to get diluted as retail piles in, and we go through the whole layer one carousel of ETH being too expensive, so then we go to Solana, etc., etc. But it seems like the crypto natives, the ones who are supposed to be buying ETH in the fucking first place, made that step, as opposed to retail making that step and us sort of dumping on their heads. You know, we sort of almost, again, leapfrogged or front ran that type of rotation where the natives get into ETH and the newbies get into the new shiny layer one, and that's the rotation. It seems like the natives skipped over ETH and went straight for the shiny stuff, which is definitely new and interesting.
Yeah, I think in general it's gonna be a good trade down the line. Like
What's
haven't
the trade,
gone.
Don? Shill it to me.
I don't know.
Buying
like
an ETH BTC nuke or something.
Yeah, I mean, if it nukes, I think ETH BTC is gonna be like, ETH is generally just gonna be a good buy. Like if ETH BTC goes down like 20-30% from here,
Jesus.
I think at that point, like it's just so simple to buy. It's too low. Like at that point, it's like very obviously too low for the narrative it has. Right now, it feels like it honestly doesn't feel like it's too expensive on the ETH BTC front. But it doesn't feel like you're getting a massive discount, right? Just because the bear market hasn't been so bad for ETH. Usually it goes down like 70, 80, 90%.
It's true.
Now it's down like what, like 50, barely. Yeah, it's not even, it's 40 right now. At the lowest point, it was 40 something. So it's not feeling like you get a massive discount. So if it goes like 20-30% lower, I think at that point you would be feeling that, and then it's just kind of like you just kind of have to take that trade.
Yeah.
Or if it gives you some strength, you can kind of bet, I think, on all of these people that have been leapfrogging ETH to just kind of pull back into ETH. I think a lot of people are just kind of waiting for a little bit of a sign of strength.
By strength, do you mean more than one green week in ETH BTC
yes.
in a row?
Because what we've been having is like one good week that retraces in the next 4 and then repeat just from a lower point.
Yeah.
That's kind of been the story of ETH, and I think that needs to stop. And at that point, like the slow moving ETH trade is gonna be a really good one. But right now, the trouble I have with it is just that trade might take forever to play out, and then you're stuck in something that moves much less than other things, and that's not necessarily the best. But I still think, but I still think a lot of the basically like ETH's been underperforming a lot of altcoins, right? But I still think ETH is gonna outperform a lot of the other altcoins now. It's just, I think that could also just be while everything on the altcoin front goes down, right? Like I could see ETH BTC go down 20%. I could see Sol BTC go down 30-40% easily. And then I think, so for example, the Sol ETH chart, I still think I would rather bet on ETH than on Sol at this point. And it's the same with a lot of other coins. So at least that part, I'm a little bit more on Team ETH, because I've been saying like ETH is the midway trade. I think at this point it's not anymore, but it still doesn't have to go up. I still think like the price action is shit. It's just I'm expecting other coins to also not be that great in the next week, 2, 3, 4, maybe a little bit longer.
Yeah, and I think your point about the lack of a discount makes a lot of sense, given this ETH BTC's been moving sideways for like 3 months.
Yeah.
So like kind of almost by definition, be very hard to find a discount in like a 3-month pretty constrained consolidation, just fighting for its life at the range low, essentially. Don, do you ever get this feeling whenever we talk about ETH? I'm like, oh, this has to be the bottom now, right? We've kind of bashed it for like 11 episodes in a row, and then it just kind of does nothing again.
Yeah, I mean, sometimes because it makes so much sense, right? And I think that's what a lot of people are struggling with too. Like, it just seems to make so much sense to just be bullish ETH based on how it's set up. So I do kind of get that feeling too, but just kind of have to look past that feeling and look at the price action. The price action is horrendous, and until that changes, I mean, it's just how it is.
Because the base argument, I think the simplest version, and correct me if I'm wrong, is essentially ETH outperforms in a bull market. We are in a bull market, therefore ETH should outperform.
Yeah,
that's probably the simplest version, right? And it's just been very tricky. I think it's just so many more choices. The ETH bid itself has been diluted with all these layer 1s, layer 2s, roll-ups and locking up ETH, etc., etc. And you've got like really fierce competition from other layer 1s, and BTC is outrageously strong. Usually we associate like crypto bull markets with like speculative fervor. And it goes sort of far further out on the risk curve, where it sort of, BTC leads the way and then people just pile into ETH and alts. Whereas this time around, like almost the entire thing has been BTC driven, which is pretty unprecedented. In terms of at least like, I mean, obviously percentage wise, because it's so high market cap, it's not a one-to-one comparison, but BTC being in the driver's seat for so fucking long is a pretty big deal. And I think that caught a lot of people off guard. That's why I think a lot of people are rushing to that rotation, because usually once you get whatever your mental all clear is for, okay, well, crypto is going to go up a lot, people try to front run the rotation and jump early, right? And in this case, they've been jumping early for like 6 months or something.
Yeah, and then they're down 50% against Bitcoin, which is quite mental when you think about it.
Oh, mate, when you put it like that, that's a
like,
scary
that
number.
hurts.
That hurts, but it's fine. They'll make it back in one trade. And again, I think you've got to cut them a bit of a break, because they're very likely trading some ETH proxies, which at least in certain windows done relatively better, right?
Yeah.
But
and I still think like they're probably gonna be eventually right. In my gut feeling is still like at some point the ETH trade is just gonna go completely ballistic, but it's just like,
bro, the hindsight posting is going to be so bad. Sorry to interrupt, but that just made me wince. I was like, oh, you weren't bidding ETH. It was like, motherfucker, you were bidding ETH for 6 months. Shut the fuck up. Get out of my face, you know?
Yeah, I mean, everything went up like 10x and ETH did barely anything. And then it's like, but I still think like at the end of the day, you're going to have a good ETH move. It's just a question of, are you going to get it from 20 or 30% lower on the ratio? And at that point, did you still like, did you actually want to sit in ETH while it went down like 60% against Bitcoin, 65, only to then like have it rally back to basically those highs and then again do nothing? Like, that's a little bit of a tough one. I think the answer to that is probably no, right? Like, it's painful to sit through this and to see it, and to see Sol do like 10 times better, for example. But I still respect it. Like, if you're in it for the long haul, like even higher time frame than the monthly, because if you look at the monthly, that looks like shit still on ETH BTC. Then I mean, fair enough, and I think that's gonna pay out in the long run. It's just you're gonna have some shitty times in between, and you already had shitty times.
If you're gonna underperform, doing it in the bull market is like particularly painful, right?
Yeah,
because the opportunity cost is like exponentially high. I use the term exponentially completely incorrectly, but the opportunity cost when the market is just super bullish is obviously significantly higher, right? So if you're going to be trapped in some underperforming dog shit, it might as well be when the market itself is underperforming dog shit. And so it just really doesn't matter. It's not like there's anything better. It's like, oh, if I rotated from this, I'll only be down 40% instead of 50%. It's like, okay, we're all swimming in shit here. It doesn't make a big difference. Whereas when stuff is 10xing, flying all over the place, then that stings a bit more, Yeah. I got some feedback that I swear too much on this show. Do you think that's true, Don?
I don't think so.
It's fucking bullshit, isn't it?
I think it adds personality. But I've always been team swearing. I don't understand why anyone would want to say anything about it. Just fucking swear to your heart's content. I don't have a problem with it.
Fuck yeah. I was gonna ask if you've been following altcoins. I think everyone knows the answer to that. It's one of those pure purely symbolic performative questions at this point.
I mean, I've been looking at Sol.
Have you been looking at Sol? What do you think?
I think it's gonna underperform ETH.
Great. That's never mind. Shouldn't have asked. What is it? A USD pair thing? A relative pair thing?
No. Just look at the. I mean, generally, I made this argument quite a while ago.
If it's the monthly, I swear to God, bro.
Yeah, it is the monthly time frame. It's the monthly time frame. Look at Solana USD on the monthly time frame, okay? And you see where we're stuck, right?
Yes.
And I was like, dude, if you break out above 40 on the lower time frames, I might as well just target 100, 110, 20, right? And that perfectly played out. Now we're at that.
How much money did you make on that trade, Don?
0. Because
he's just like me, for real.
Because I was busy trading Bitcoin.
And Litecoin.
Yeah, no, I wasn't trading Litecoin in those months. Litecoin was much, much earlier, which, is what it is. Anyway,
I called it, bro.
Resistance.
I called it.
Yeah, at least something, right? At least get the cloud tokens.
It counts.
But that's the only resistance that's on that chart, right?
Yes.
So like people have been asking me like I want to exchange my ETH into Sol. Pretty much the only time they asked me was in that resistance, right? Now we've been stuck in there for 3 months and it's been shit. So that's the USD pair, which you can be like, hey, it's just consolidation at that resistance, and I could be on board with that. But then you go on the Sol BTC pair, also on the monthly time frame, and you have the same fucking resistance. And it was kind of like the whole Sol is going to overtake ETH thing was a little bit much 2 months ago. And I think just based on those two resistances being hit and that whole narrative getting overheated as fuck, I think that's just going to drag Sol lower. Doesn't have to go much lower on the USD pair if Bitcoin plays ball. But I think in general, in comparison to ETH, for example, or in comparison to Bitcoin, I don't think it's going to do too well in the near future. Longer term, I think it can. If it pulls back like for 3, 4, 5, 6 months here against Bitcoin, I think you can have another rally of the kind that we had before, which is massive, right? Like that was a massive move. So like at that point, like I'm not saying Solana is never going to make new highs. That's very much not what I'm saying. I think it's going to be an interesting trade again. I just think it needs some time to digest this. And just looking at the charts, they kind of seem to support that claim to me anyway. The high time frames look. I mean, the high time frames hit resistances, and the whole narrative got overheated. So that combination makes me confident enough to say, like, yeah, I think ETH's going to outperform that. But I could be wrong, and I'm not, like, it's not like I traded it. I just called it. So
you pulled out all the stops to make that argument, Don. You were like USD pair resistance, BTC pair resistance, Sol ETH resistance. Like, what other pairs you got? Sol gold.
That's pretty much it. But I think with kind of like the whole narrative, like that's a big part of it. Like, basically,
I mean, the flippening talk is always, dude, I swear to God, in crypto, like flippening any coin, any asset relative to anything else, it's just not a good thing to talk about. I recommend no more news like this for the sake of the industry and your coins.
And at the end of the day, I mean, Solana has quite an overhang, so to say, from the whole FTX saga and like just generally.
Well, didn't stop it from ripping 1,000,000%.
I mean, I think that was the reason why it ripped so much, because a lot of people were like, hey, this has an overhang, it's gonna nuke, and then they shorted it, and then they got blown the fuck out. And then a lot of people that actually believed in Sol sold their shit because they were like, fuck this, like this makes no sense anymore. And then it ran and they were like, fuck. And then they obviously buy into the run.
Yeah.
And I think all of that has played out, you know, like that whole, like, I don't think Solana is a popular short anymore, which is hilarious because people shorted this shit when it was breaking out above 40
and
all
even
the
way
time.
Before that, right?
Yeah, this is something that you see in crypto all the time. It's the same with Dogecoin runs and like all the altcoin runs. They run like fucking crazy and everyone tries to get the short, and then they turn boring and people just stop, right? They're like, okay, whatever, I was wrong on the short, fuck it. And then they just leave it. And at that point, the market turns to shit, usually, right? So like if there's an altcoin that you want to short, like it's going to have a blow off top, but gambling on that is very, very risky and very unlikely to pay off. But then when it gets boring and it like gives you a good entry while it's being boring, that's much more likely to give you results, right? So for the people that have been like saying like, yeah, this has an overhang, FTX, whatever, I think if you wanted to, on a ratio basis, this is better than it's been the entire run up to be bearish on, I think. But what do I know? Like, I'm not the altcoin short guy. There's people that do this for a living. I think
it's not good.
The
it hasn't been
side,
a good living.
no, but I mean, some people make it quite nicely. It's just, I think the long side, if you catch that right, is so much more lucrative that it's just a more interesting
just
trade.
Purely mathematically, even, right?
Yeah,
I also think there's a massive survivorship bias to people who you see shorting altcoins, like very tactically and strategically, and even then they're very likely highlighting, well, giving you the highlight reel version versus the big picture. I think just in general, historically, if I've seen this argument made on Twitter, there were some arguments presented from fellow Twitter accounts saying they just make the most of their money in crypto shorting altcoins. And I just don't think that. I mean, look, you have your own trading style, own approach, but out of all the trading opportunities crypto has, I think making short altcoins your bread and butter is just like a very weird one to go for. There's much lower hanging and more profitable fruit than that, I think, even you know, considering individual differences or whatever.
100% agree. But I think, like I said, it's at a point where it was boring. It gave a pretty good entry on the Bitcoin pair. Now it looks kind of shit. Could bounce again, I don't know, but I think in general, like against Bitcoin, I wouldn't expect that much more from Solana for a little while. But I could be completely wrong. I don't want to give any shitty advice because I'm not trading it.
Or any advice. We don't give advice on this show.
Yes.
Right?
It's just what I'm feeling.
You're feeling. It's Don's Vibes. We should dude, we need to rename this show to Don's Vibes. I'm sure there'd be zero
we talk
objections.
too much. We talk too much about feelings, dude. What kind of show is this?
I wonder what this show will look like in like 10 years. It'll be nothing to do with markets, right?
Oh, I'm down.
It'll be like about gardening, jujitsu. I don't know.
That sounds good to me, dude.
Sounds pretty fucking good, eh? Philosophy, like amateur philosophy. Amazing.
American politics.
American politics, yes. Oh my god, that's people love that shit. I do want to ask about Sol quickly though. You mentioned basically monthly to monthly on the USD pair, right? Yeah. Is there any monthly support that you'd want to buy on this thing, or is it just like,
dude, if you're talking about monthly support to buy, it's 40, dude. But you cannot. Like, I don't think that's highly likely. I think 58 on the weekly time frame. That's an interesting level.
So that little cluster post breakout.
Yeah, basically, like we had the giga run up, and I think that might be an interesting one. But honestly, like I'm struggling with that one just in general. Like, I think Solana had the run, and I think if anything, if I want to buy altcoins, I'd be buying ETH at that point. Like if Solana pulls back to those levels, I'd just probably hop on ETH, just because it's more clean. Like Solana could easily outperform again at that point, but it's run so much that it basically makes it very hard to trade on both sides. Like it's very hard to buy this thing when it's up this much, because you basically don't get good levels. But with ETH, for example, where it's right now, it's quite clean, you know. Even if you get much less of a move, at least you have good invalidations and good generally good liquidity on probably both. But
you can
it's
run
easier.
up the leverage.
Yeah,
as long as you use our ref link, of course.
Yes, please do it on our ref link.
For the sake of my family. Also, I think people sort of look at Sol purely in price percentage move terms, and like the ecosystem that's built around it, the meme coin, etc. All that I think is valuable and correct. But purely in terms of market cap, this thing did a fucking quantum leap, right?
Yeah. And in comparison to everything else, yeah.
Yeah. And I think you and I have discussed in the past, this is an argument you made very well, that sometimes just like those, you kind of have market cap resistance, if that makes sense, where it sort of breaks certain barriers or flips a nearby coin in like the top 10, 20 or whatever. Like the price action just kind of fucking changes when it gets that big or moves that much that quickly. And I think Sol's a good example of that, from fucking $8 to 120. You know, it's just not going to trade the same way.
Yeah.
So that's a lot of.
I mean, look at Dogecoin, for example. Like, just look at Doge. I mean, look at Dogecoin, Bitcoin, and then like this is what happens when coins run too hot. Which is good, you know. Like, it's good for the people that trade this shit. The holders, not so much.
What is Doge BTC?
It's quite wild, huh? Yeah.
Yeah.
I mean, this looks like it wants to go back in the old range of,
The old range.
of 20 to 100 sats. Dude, it's at a 160 sats. It's insane. It's almost back to like old bull market levels.
That's down 87% from the highs on the BTC pair. It's incredible.
Yeah. So I think in general, like you could have been like, Dogecoin was running, and then people were like, okay, but where do I bid this on a pullback? And the answer is nowhere. Like, look at this chart. Like, no matter where you bought this shit on a decent pullback, like the price action was garbage. There was 1 week on Doge BTC, which was the 24th of October, which was a green candle. Everything else, you just didn't make any money for years. And I think this is something that you have in crypto quite a lot, where you can be like, yeah, hey, where do I buy this on a pullback? But the answer is very often just don't. Like, trade something else. Like, this had its move. This, like, just do something else. Bid a newer coin, look for another thing to trade, because, I mean, it's just, you're not going to have much fun. I think Dogecoin is going to be a decent trade in the future again, but I don't think it's ever going to go back above all-time high against Bitcoin. I think that high is forever set, and it's basically down only from here on, just slowly. So I think there's going to be another bounce, but that's kind of fucked. And I don't want to say Solana is going to go the same way. I'm just saying, like, that thinking, like, hey, where do I bid this on a pullback, is actually, as dumb as that sounds, just not necessarily the correct one all the time. Sometimes you just don't want to buy it, even if it goes down 50, 60, 70, 80, 90, 99%.
It's like Axie on the way down. That's the one chart I keep coming back to. Is that even a good example? Like on the monthly, you know, like just look at Axie on the monthly as an example of
against USD.
Yes. Yeah, like, I mean, this is such a fucking crypto pattern, whereas, and this is what makes it hard, you know? It's like, people talk about easy mode, but even easy mode is fucking hard, because what will happen in these cases is that you get your high time frame trend forming breakout, you get the uptrend, and if you don't have low time frame trend following tools, then you just fucking wait, right? It's got fuck all else to do. You just wait, but then by the time you actually get your high time frame pullback, the trend is actually done. And so you either just end up acting as exit liquidity, or having missed like a 10,000% rally, you catch like a 20% bounce before it makes a lower low. That is just like such a crypto pattern, where you have consolidation, you don't buy, breakout, you don't buy, because you're like, I'm not a breakout trader, bro. I'll wait for confirmation or wait for a pullback or whatever else. It just fucking rips face. It keeps going. By the time it gives you the pullback, it's on the other side of the trend at that point, and you're fucked. And you just kind of miss out on an entire market cycle. That is super fucking common.
Yeah, I mean, and now, just because we're going through examples, look at Litecoin Bitcoin.
you dream of this chart, don't you?
I mean,
you
just
close
look at
your eyes. Oh,
it's the best example of it.
Oh, mate, what is that? What about the halving?
It's halved. It's more than half the price. The halving was on the 31st of July, 2023, or like near it. That's the weekly candle where the halving came in. And price is down more than 50% since, so that halved quite nicely.
That is a halving, yes.
But that's basically like what I'm talking about, right? Like, you could have been like, hey, where do I buy the pullback on Litecoin Bitcoin? The answer is like, there's a lot of pullbacks on Litecoin Bitcoin.
Take your pick.
Take your pick, but it's not gonna be so pretty. And so you gotta be careful, especially with the older coins. You either get on the right time and it goes up and you have to sell eventually, or you buy this shit and be a back holder forever. And this is quite brutal, and this is something that can happen to you, as long as, I think the only one where you can be certain that you're gonna make money on buying a pullback is Bitcoin. And that's the one thing that sets everything apart. Like in crypto, like, you have these things that go up 100,000%, and that is definitely not Bitcoin anymore. And I don't think Bitcoin will go up that much.
Bold claimed on.
Yeah, but you also will, like, if you buy Bitcoin, you also will not just lose everything over the long run. So there you go.
Or at least you're less likely to. Investments are risky. Speak to financial advisor. Past performance does not guarantee future results, right? Like all that stuff.
Yes.
Don's out here on a surfboard being like, you're guaranteed to make money if you buy a Bitcoin pullback. And my phone just starts buzzing from legal.
Nah, obviously you're never guaranteed for anything. But the only thing that where I'm quite certain that you're going to do quite well, or that I'm going to do quite well. This is why I keep buying. Whenever Bitcoin looks like it's going to zero, I buy, right? And the reason for that is because I don't think it goes to zero.
Sometimes
with
it's just
altcoins, like with Litecoin, for example, it looks like it's gonna go to zero. It might actually just go to zero.
Look, it just needs to fill the wick. Do you have the wick from December 2017?
Oh yeah, the Binance wick, yeah.
Yeah. That's what, actually, 100 sats? Just a casual gap fill?
I think on one of the pairs it went to zero even at some point.
Christ.
So it's gonna fill that gap.
Fill the wick.
I'm gonna buy it at zero. Fuck it.
Yeah, buy some Litecoin at zero. Why wouldn't you?
Yeah.
It feels good. It feels like one of those good trades. The other altcoin stuff, Meta's been moving pretty quickly. I saw some Sui and Say back and forth bid, say around $1. That's just been super strong. WorldCoin did really well around because they kind of still see it as an open AI proxy, among other things. So that went up. No massive surprise there. WIF has been oddly resilient given it has its centralized exchange listing, I think. I thought it would just like mega dump. It hasn't made new highs, but it's not at zero. So that's one of the stickier Solana meme coins, it feels like. Yeah. But I'd be very shocked if it ends in a particularly different fashion to most of them, but it's still tradable. Interestingly enough, on Breakout, we can see the most and least profitable symbols by P&L from people who trade there, and WIF was the least profitable one over the last week. Isn't that interesting?
That is interesting.
And INJ was the most profitable one. But if you look at those charts, INJ has just been like the most awful chop you've ever seen. And WIF actually kind of trended up for a week, but the one that trended up had the worst P&L and the choppiest one had the best one. So either our data's dog shit, which I didn't think is the case, or I guess people just trade kind of weird, right?
Yeah, I think if you assume that people just trade kind of weird, you're almost always going to be right.
Yeah, I think that's right. And then Bonk had some news. Did you see some? I think it was like Revolut or something, and it's Bonk to earn. I don't know, they're really trying to build an ecosystem around this thing.
That's what they did with SHIB too. Do you remember?
That's what they did with SHIB, yeah.
Like that's literally the exact same playbook. And did they ever come back? I don't think it did.
What, SHIB in general? Price-wise or what?
Yeah, just generally. Like
I mean, it's been in a range since mid-2022.
It's great being in a range where Bitcoin goes up 50,000%. Let me check. Yeah, SHIB BTC is horrendous. Holy shit.
Take a look at this.
I mean, it's that you basically have to do SHIB USD divided by Bitcoin USD. I mean, there is a pair, but it's shitty. But yeah, I mean,
I just did BTC USD by SHIB USD. I was like, oh my god, this thing looks insane. And then I realized I got it the wrong way around.
I mean, that works. Yeah, just gotta put it the other way around and then be happy about your gains.
Oh mate, yeah, that is not great.
Yeah.
And again, this is like a low market cap shitcoin versus BTC, literally #1 market cap, right? So
yeah,
you always have to consider that. Like, how easy is this thing to push around? And that works generally in favor of altcoins, right? At least it should, if the market is strong. And yeah, yikes. Do you think any of these Solana meme coins will end up differently to all of history?
No. I mean, no meme coin is gonna like Dogecoin was the one that reached escape velocity, right? It's the only one that we've ever seen that just like everyone in the world, basically, it feels like knows Dogecoin, and it still wasn't enough. I don't think like with meme coins, yeah, you can make money in the short term, maybe even in the midterm. But if you hold something for the long term that is anywhere close to a meme coin, I mean, it's gonna go to zero, in my opinion. Like that's just the end. That's the end result of the meme coins. I mean, it's a meme, it's in the name. Like, and memes always disappear, right? Like,
well, they become old and people forget.
Yeah, I mean, no one's sharing advice animals anymore. like
Speak for
that was
yourself,
a
dude.
meme. That was a meme, and that was everywhere. And no one talks
I
about
still
it
send
anymore.
bad luck Brian and Trollface to my friends. Maybe that's why they don't respond.
Yeah, I mean, Trollface actually stuck around for a little bit longer.
Trollface is Lindy.
Yeah, I think so too. But
There we go.
like,
A whole new discussion.
yeah. Anyway, the meme coins, like long term, you're not gonna have fun with it. But
To me, the weird thing is, like, meme coins are
trades.
amazing for trading, right? Like, by definition, they're amazing to trade, yet they attract and encourage an investor base while they're,
Which
like,
is
generally
weird,
the worst
right?
investment, at least in normal investing timelines, right?
I mean, you need exit liquidity.
You need exit
Someone
liquidity.
has to hold it.
Yeah. It's
and I think that's
unfortunate.
That's the whole point, you know. Like that, I think that's what honestly, as bad as that sounds, that what people are kind of doing, you know.
Do you think it's deliberate?
Yeah, somewhat. I think people don't realize that they're doing it, but they're doing it kind of like these communities. They're like, people buy it and they want to sell higher, and then they tell people how great this is, and then they kind of meme themselves into actually believing it. But the initial idea is, hey, I want to shill other people into it, so price goes up, and then sometimes they kind of meme themselves into it and fuck themselves over by doing so. But I think that's kind of where
I think that part's really important, Don.
Yeah, I think that's where the initial idea comes from. Like, people are like, oh, this is a meme coin, I can shill it to people and it's gonna go higher, and then they fucking they just delude themselves while shilling it.
Yeah. I think that's the core of it. I think money changes a motherfucker, you know? Like, even if you approach it with your whatever crypto experience you have and some healthy dollop of cynicism, and you're like, yeah, I know how this is going to end up. But then if you're early enough and actually catch the 10, 50x, you're drinking your own Kool-Aid at that point.
Oh, yeah. I mean,
like that will start to fuck with your brain.
And a lot of people have done this in past cycles. So I've seen a million times with Dogecoin, right? Where people are like, this is funny. I'm going to put some money into this because it's so dumb. And then it goes up and people are like, oh yeah, or like the same with sheep, right? They were like, oh, but they're building an exchange now, like a decentralized exchange on sheep. And it's going to be so fucking great. And then, like, they keep talking about this shit as if it's gonna do something, but obviously it's not, right? Like, this is based on a meme, this is based on dog shit, and but they meme themselves into it, and then they lose more than they can afford to, which is interesting to see. But I guess it's just how it works, and this is why it's so good to trade. Even though it's like a little bit like the morality of it is a tough one, I think. But yeah.
It is a fantastic group of people to trade against, though, right? Because they're, by definition, going to be newer and less experienced and more inclined to hold in general. And, you know, so if you're looking for kind of exit liquidity or people who just kind of will just hold no matter what, those are some pretty fucking good counterparties to have.
Yeah. And they're gonna get you more exit liquidity. You just need to sucker like 5 people. Like, this is what they do, you know, like they get like 5 people and those people get 5 more people. Like, it's the Ponzi scheme of exit liquidity, where it's like, if you convince one person to be your exit liquidity, you're gonna have 10 more because that one person is gonna get other people into it. That's why I'm like, you will not see me tweet about any of these meme coins and any of this shit, because I think it's just kind of keeps that whole thing going and suckers more people into something that, like, at the end of the day is going to make them lose money. I think like I said, there's good trades there and all of that stuff, but it's a sad thing all in all. It's people trying to gamble, basically, and I mean, fair enough. But the end result should be clear for everyone, and for some reason it's not.
Yeah, it's one of those weird ones, right, where you'll be attracting some of the more desperate and less experienced people to this kind of stuff, and they also have the least to lose in terms of just their trading, and they're more likely to be gambling with more money than they can afford to lose, etc. So it's like, you know, again, for trading it's super favorable, and the morality of it is a bit weird, especially with meme coin season. And we kind of go through ebbs and flows of it on crypto Twitter, where you'll have certain weeks where everyone's just like pump and dumping garbage, basically. And it's just, it reminds me of what's the name of that movie where all crime is legal for 24 hours type of thing, you know? Is it The Purge or something?
Yeah, it's The Purge. Yeah.
It's The Purge. It feels like we go through weeks of that on crypto Twitter, where it's like, oh, we can just like pump and dump low caps on each other for period of time. And there's like a global amnesty about it. And then when it dumps or we move on to the next thing, kind of all forget and forgive, and no one really wants to sort of bring it back up because you'll be throwing stones from glass houses. And this is almost like mutually assured destruction at that point. So you kind of just bury it barely 1 foot under the ground and move on. It's very strange. And you also get some really bad arguments and weird justifications. Like, oh, look, you know, someone will bring it up, like maybe someone in the comments being like, hey, what about this coin? And the answer was, well, it went up like 20x after I shilled it. Why didn't you sell? And it's like, I don't know if that's a particularly good defense, you know?
Yeah, not really.
Do you find that compelling? Like, look, let's say person X shills a meme coin and they make it their personality for 3 to 14 days, which is usually how long it lasts, right? Sometimes shorter, sometimes longer. And they shill it and it actually goes up a lot. But then it ends up, like a lot of these have had super short market cycles, right? Like even like the Solana meme coins, there are some really notable examples where we're talking less than a week from when it starts getting shilled, super markup, and then super markdown close to zero. So let's say person X was admittedly early to shilling this thing. So we know they're going to make a shit ton of money, but also those who followed them initially and followed the call, at least from an unrealized P&L point of view, also sat on a shitload of money. And then, you know, 3 to 14 days later, it goes down to pretty much zero, down 80, 90%. You bring it up in the comments being like, hey, what about this coin? It's really wrecked now. And then the response is, yeah, but it went up this much. If you didn't sell, you're an idiot, which is actually not even a parody. It's a very common response, right? Like I've seen this with my own 2 eyes. What do you think of that argument?
I mean, it's a little bit of a shitty one, just based on the fact how I described how this stuff works, right? Like you shill a person into something, they're gonna shill other people into it, right? So you basically start like a daisy chain of sorts, right? Like of like just dumb shit, and you started that movement, right? Or you took part in that movement, and yeah, maybe the first in line of that chain is gonna be okay, but the destruction at the end of it is real, and you kind of took part in it. I think there's very little that you can say to kind of make that go away. It's like saying like, hey, I started a Ponzi, the people below me that took part in that Ponzi made a bunch of money too. So I mean, that was completely legitimate, right? But it's obviously not. Like it's not how it works, right? Like just because the people directly below you, or like in general, like a few people made some money, doesn't mean that there is like a sound thing to do. Now, obviously, like I think, I don't know, like it's crypto, and if you shield something, it goes up 10x and then it dumps to zero afterwards. I mean, did you do a good job trading it? Maybe, depending on how much of that movement was depending on your tweet, because at that point, then it's not a trade, it's just you moving the market. But like, I think the whole, is this a good thing to do? That question is quite easily answered. And I think generally, like saying, fuck you, it went up a bunch, I think, like you said, it's not necessarily the best argument to be made, because yeah, it's kind of like you put out destruction on a timer, right? And then people jump into it, and like whoever is left holding the bomb dies, and you kind of put that bomb out there. I don't know. This doesn't seem right to me, but yeah.
I think the meaningful, almost formal distinction comes in 2 forms. The first is the inevitability of the outcome, and the second is the massive asymmetry that's baked into that so-called trade. And I think those 2 things really sort of color the moral landscape. As far as the inevitability, it's that because this is so short term, and because it's like a meme coin, usually on some other chain or ecosystem, there's like a ton of, and also if the market's just moving very quickly and attention spans aren't sticky whatsoever, and there's truly nothing meaningful being built, which you can argue for the whole space, but that's a different discussion, then it's overwhelmingly likely that it ends with a high volume blow off top and then quickly bleeds to zero, right? That's just, and it happens so quickly as well. It's both inevitable and swift. That's what I think is the first consideration that makes it different from, for example, sharing BTC trade ideas. And the second one is, as I mentioned, the asymmetry. Like, for example, if you're going to be shilling a BTC long, how much real asymmetry do you have, both information-wise, size-wise, or other edges, when it comes to sharing that trade with your audience? It's like close to fucking zero, right? Like you're not going to be moving BTC markets single-handedly. or at least enough to have like a really material market impact. On some of the altcoins, it's definitely real, but on the really liquid, high cap stuff, especially if you're swing trading and multi-day, multi-week stuff like BTC, ETH, high cap altcoins, you're just not moving the needle that much. And also, there's like a very low chance from a sort of, again, information symmetry position that you know something or know someone, or you've managed to corner a large chunk of the supply before tweeting. Those are things that just aren't available in liquid high cap trading. Whereas if you're going down the meme coin route, I think all of that applies. So there's the inevitability as to how it's going to resolve. There's a certain swiftness to how quickly it goes, which makes it actually harder to trade properly and realize profits and trade manage and all that type of stuff. And then the asymmetry in terms of just like size, market impact, information is like nothing else. And so I think that's really the difference between liquid, high cap sharing trade ideas versus essentially pump and dumping meme coins. And I think those reasons are also why the defense of, oh, well, it went up first doesn't work either. You know, I feel like you sort of lose the right to make those types of arguments when there's just so much asymmetry in terms of size, information, market impact, so on and so forth. But you're directly creating those conditions as well. And you set up a no-lose scenario for yourself, which I also think is quite different.
Yeah, I agree.
So anyway, buy CredCoin.
Yeah.
Don't, please forget I said that. Someone's going to make it on
someone's
Solana
going to make
and I'm
it,
going to jail. I do not endorse any cryptocurrency project. There we go. Exchanges, on the other hand. Should we do some news very quickly? We've been rambling for fucking ages, mate. I was going to do some futures stuff, like open interest set like a mega new high, and there's some quarterly stuff, but, you know, basically, there's a lot of people trading. There you go.
People are gonna be like in the comments. Show ends at like because the last half an hour was just rambling.
You're so true. That's so right. Look, if at least one person finds it somewhat valuable or interesting, that's worth it. You know, for me, it's like an opportunity for us to chat and catch up as well. You with your busy life and me with my. Anyway, on to the news section, and we've covered some of this before. If you want me to cover the future stuff on Monday Markets, let me know in the comments as well. We can take a look at global open interest and then some of the funding rates creeping up on altcoins. And then we can look at the basis on the quarterlies relative to where it was at the last lower high. So leave a comment, leave a like, do all that stuff. YouTube. Still sounds so weird saying that in a British accent. I can never get over it. Court rules Genesis can sell over 1.3 billion worth of GBTC shares, according to Bloomberg. It doesn't. I mean, 1.3 billion is like relative to the inflows. Like it's not a small amount, but also it's not like a colossal overhang. Is it roughly the size? The FTX estate have a lot more or a lot less? I'm getting my numbers mixed up, but I think it's similar-ish.
Roughly, yeah,
right. It's similar-ish,
same, I think.
And that had a big market impact because it was like new and different. But I don't know when they can start selling this, if they haven't already. I'm sure someone's tracking that, or at least sort of looking at GBTC outflows to infer whether it's happening. But the market reacted like decently well to this, right? At least compared to how the market reacted when the FTX estate selling was happening. It feels like this was, to the extent, at least from a headline point of view, that it was absorbed, it was fairly decent. And, you know, even if they do sell, as long as the inflows to the ETFs don't just completely dry up, and just in general, there's just a lot of space until we start getting to levels that get scary. I'm not turbo worried about this as a sort of independent catalyst. What do you think?
Yeah, I think in general on that front, you're just gonna basically gonna be able to judge how strong the market is once those flows hit, you know, like as in like with the FTX thing, you saw a little bit of a pullback, but like it was mostly absorbed, and then we just giga chatted up. If that happens again, it's gonna go up. I don't know when that's gonna be, and I don't think it's actually set anywhere, right? Like when we're actually gonna see that selling from GBTC. But yeah, basically that's gonna be the best way to judge the strength of the market. And I think for everything else, it's just basically useless as like a kind of like predictive tool. Like you're like, oh yeah, they're gonna sell 1.3 billion, whatever, and the market's gonna go down. I think that's a little bit of a stupid way to look at it, given how much ETF flows we've been having, right? So it's just kind of like, we'll just see, like if the market craters and starts like going down massively, I think it's probably a dip you don't want to be buying immediately, just because there's just like the bid side is exhausted as fuck, and then you just get a second move down, lower. If it just gets absorbed, I mean, you have to like expect another like 10, 15, 20% move to the upside. That's kind of how I look at it.
I almost think it'd be fake causation if the market goes down with this kind of thing, because then the more compelling argument was that according to Don's vibes, we were extended anyway, and so you add a bit of supply to the equation, and you know the fireworks are there already, and this just kind of lit the match. You know, it's not the cause of the weakness per se. You know, this was already structurally weak, and this kind of tips the first domino if it plays out that way. But people love, especially financial journalists, I'm not accusing the block of anything, but the way people interpret news and price action is always like purely causative, but I don't think that's a particularly useful way of looking at it from a trading point of view.
No, usually the market is set up one way, and then news hit, and then it either like if it like for example like if you have like the market is weak generally, and then you get bad news, right? Like that's gonna nuke the market massively. If the market is strong and you get bad news, and people are like, why the fuck is it not dumping? It's because the market is strong, right? Like or like in general, like this is just how it works. Like you have the consolidation, you get positive news, it goes up, and I mean, people are like, oh, it's going up because of the positive news. It could have gone down as well if the market was shit and you get positive news and it's going sideways before, and then nothing happens. Usually those tend to lead to big moves to the downside too, and then people are surprised. But it's because the market is kind of set up in one way or the other, and it's almost impossible to judge where the market is positioned. At least for me. I haven't found a better way other than just looking at, is this good news? And then you kind of have to quantify how good it is and how expected it was. And then you just look at the price action and you're like, oh, well, the price action is worse than it should have been. This is, for example, why I was like, hey, like at 38, 39K when we had that ETF news dump, you know?
Yes.
You like remember when we went down, I was like, this is actually much stronger than I expected. People were like all over my comments being like, much stronger, like this is a massive pullback. And I'm like, yeah, but this should have been much worse if it was actually bearish. And then we got like from 38 to 52 went basically in a straight line.
Yes.
And this is kind of like what I mean. Like, yes, the market went down, but I think most people expected more, and a little bit more urgent selling in general. And what we saw was kind of absorption. And I was like, I can tell that this is much better than it should have been. And that was quite obvious to me on that front. And it's going to be the same with this. Like if you're going to see, if the market just isn't able to absorb, I think you're gonna see much more downside than you'd expect. But also, if it's able to kind of absorb this fully, you're gonna get a nice move afterwards. So that's just kind of how I look at these things.
Yeah, you can always build a framework around it of expectation, magnitude, impact, right? So expectation is, I mean, was the news expected? To what extent was this telegraphed? Magnitude was how big is this piece of news? How important is it? And then impact is the market moving in tandem with what you'd expect from big good news, big bad news, or whichever sort of quadrant it falls into. And if there's a divergence, that's where you'd likely have an interesting trade. There you go. Dude, I'm just spitting straight frameworks. You know, it's like my third one of the show. Someone give me a book deal or something. I need to make some money.
But I actually think like this is basically the most sophisticated, because everything else is just kind of like very hard to justify, quantify, whatever. But that's basically the most sophisticated way we as retail can look at the market.
Mate, this show is great sometimes, you know? You come out with like the ETH midwit thesis in the middle of just like some ramble about ETH, and it just like plays out for a whole year. Then you can come and learn fucking weird mental model trading frameworks in the middle of talking about random shit and swearing too much. I don't know. There's something really charming about Technical Roundup, I think.
I think so too.
Right, next one. Bitcoin spot ETF net inflows now total over 4 billion since launch, CoinShares analyst says. I think we've sort of covered the ETF pretty exhaustively. The main takeaways are that this is just really fucking impressive. If it keeps accelerating, that's just bullish, and I think that needs to be made more complicated. And also, I thought it would take longer to reach this type of velocity, but it hasn't. I think it'll be interesting to see how the market would trade once things start to notably slow down on the ETF front. and also at which price points that sort of takes place. I think that'll be really interesting. But for now, we seem to be in a bit of a almost Goldilocks type of scenario, or at least honeymoon phase when it comes to ETF inflows, volumes, launch metrics, and corresponding price action. So good. Although this is an interesting one because we talk about the halving a lot, and I think we've both in the past expressed some degree of skepticism about the sort of causal nature of the halving. Because if you reduce the supply, it's still really, for crypto, it's demand that's the more important variable out of the two.
Yeah.
Obviously both are important,
100%.
but for crypto, with how cyclical it is and everything else, the demand side is much more important. Look at Litecoin, that's an absurd argument, but also kind of accurate, right? Like, it's not, I think that's at least a good demonstration that you need both sides to play ball if you want price action to play out really well. I mean, you have a lot of tokens doing all sorts of burns and other mechanisms to reduce supply, but if there's no demand, it doesn't really fucking matter. Now, this is an interesting one. So historically, we've sort of not talked down about the halving, but maybe pointed towards other factors that have more impact on the demand side. The interesting one here, at least for me, and I wonder what you think of this, is that even if crypto natives to varying extents know that there's more to the halving than meets the eye, now that we have like a relatively new crowd via the ETFs, I think we could see a kind of feedback loop created to these newer participants where, they sort of been watching the Bitcoin price action. It's been going up. Now they have access to this product without the requisite experience about halvings and whatnot, even though, again, historically tend to line up quite bullish, even if it's not causally so. And so I think we might have spoken about this months ago, but you get a scenario where Bitcoin price is going up. You now have a way you have products that are regulated and you're comfortable with via all these well-established counterparties that you can use to access the same product. And there's also now a nice, convenient headline catalyst that's covered in all sorts of financial media that justifies you aping in at pretty high prices. So kind of to summarize, the existence of the ETF, which is a new product that opens Bitcoin to new kind of traders, new audiences, new participants, it sort of reinvigorates the halving narrative because they kind of don't know any better, or at least at face value, it's sort of plausible enough to continue when you see the market go up a shit ton, if you really want a piece of it, even if you're feeling FOMO, you can always rationalize that FOMO through something else extraneous, right? Like, even if you know deep in your soul that you're fucking FOMOing, if you can find some sort of like intellectual cover or plausible deniability for FOMOing, you'll fucking do it. Because if it goes wrong, then it's materially less embarrassing, right?
So stock to flow, for example.
Yes, stock to flow, for example. That's a fantastic example. So I could see this coalesce quite nicely, where yes, it's just boomer FOMO that this shit's going up and they can buy it now, but the halving essentially gives them intellectual cover to come in and keep buying our bags. What do you think?
I mean, yeah, I actually like it. Could lead to kind of like a buying into the event rather than like buying afterwards.
That's the real Salva news, Don.
Yeah, maybe. I mean, it's quite a funny one because obviously the halving is not, one, it's not news, and two, it's technically like after, like it obviously like after the news, basically it happens after the news. But I think, like you said, it's the halving thing. It's quite a small amount already that you get realistically, like a small amount of Bitcoin, and every single halving gets less important because the impact of it is basically halved every halving, which I mean just makes sense because it's half as much coins.
Advanced maths with Don.
But yeah, I like the line of thinking where like people are gonna buy it, like looking for an excuse, and then it's just gonna buy it.
Yes, we're just giving the boomers just a reason to FOMO, something that they can cling on to. It's not just like, no, I'm not just buying it because it went up. It's because there's a thing called the halving. Richard, he says at his golf club,
Yeah, like, and then Richard buys it too.
And then Richard buys Matic.
I hope the boomers they don't even understand that there's anything beyond Bitcoin. That'd be the most helpful for the entire market. Oh shit. Dogecoin ETF.
I don't think that's particularly likely. In general, I'm not super convinced of the, now everything's going to have an ETF and it's going to be just an ETF crypto market. I think Gensler grinded all of his teeth to dust voting for the BTC approval. I just don't think there's a ton of appetite in the SEC with something so politically controversial to approve a bunch of other ETFs. ETH I could see, and the Bloomberg guys are also generally optimistic, although I think it might be sort of, I don't know how popular that product would be if you can't get staked ETH and get that native yield, essentially. You'd be missing out on, over time, quite a lot of upside. So that's a whole different Casual Friday discussion. But I'd be very surprised if we enter some sort of, TradFi, Frankenstein's monsters meta where centralized exchanges basically die because you have much cheaper, much better regulated altcoin ETFs from all these legacy providers. I don't know how far away that is, or even if it's a reality, but I'd be very surprised if Bitcoin is like the first one out of like a long list.
I think it's a matter of time as long as crypto stays alive. Like as long as we have it, I think, and as long as it stays attractive, it's just a matter of time. But it might be a long time. But I think generally, like I think the exchanges that we have probably gonna get wrecked down the line just by more centralized, like more sophisticated products from just the traditional world, because there's enough money there to make sense, right? So as long as that stays the fact, like as long as that kind of stays, I think we're gonna have the ETF of everything.
Oh God, we need a BlackRock RefLink in that case.
Oh yeah, I'm down. But they barely get any fees, so that's not even you don't even get that much.
Oh God.
Nah, I think it's down the line that's gonna be a thing, but it's not in the next 2-3 years. I think it's a little bit further than that. But if crypto stays around or gets even more popular, I think that's gonna be the end game.
I hate that, but you're probably right. We need a different SEC chair, that's for sure, though.
Yeah,
that seems virtually inevitable anyway.
I mean, he's gonna have a heart attack when ETH gets approved.
Can you imagine? God, I'm so not ready for round 2 of ETF speculation, where I've got Eric Balkunas tweets playing through my fucking loudspeakers at 3 a.m. You know, like I don't want to go back there, Don. Although the trading was great.
Yeah, I mean, it was one of the easier trades, so I'm not hating on it too much.
Why'd you sell so early if it was so easy, bro?
Oh, I mean, up to that point, it was easy. I think like the later part of it, it's a little bit harder, but also.
What do you mean harder? Just hold, pussy.
Oh yeah, I mean that's. I mean, honestly, fair enough. Fair enough. I can't even say too much to it. I'm just like, I don't know. I'm still happy how it went though, all in all. So
it was cute.
Yeah. Anyway,
that's it. No more news. No more show. That's a very long ass Casual Friday. Before you click off, make sure you like the video and subscribe to the channel. We'd appreciate that very much. Thank you to Woo for supporting the show. Their links are available in the description below. If you haven't tried them and you've been watching Technical Roundup, give it a go. Tell us if you like it or not. Send us feedback. We'll get it to the team if it makes sense. That's all from us. Have a wonderful weekend. Don, thank you, and we'll see you next week.
Bye.